Yes, people, a very happy to all of you. So, guys, we're doing this chapter called as partnership, and in that, the very last unit of this partnership series is dissolution of partnership firm and LLP. Guys, this is the final chapter of the partnership series, and before I, take the class today, I have given all of you 6 classes of the 12 CBC. In 12 CBC, we had dissolution topic. So the fundamentals of that, the basic classes of that, I have given all of you to watch it. So today, whoever is watching this class, I hope the initial 3 videos at least you should have completed before you see my today's class. And the remaining 3 classes, you can do it after I finish today's session. So now, guys, let's quickly do a recap of what what you learned in the 3 videos. I'll give a quick summary of that in today's class. With the help of those 3 videos, today comfortably will be in position to do with the illustration 1 and the example question. So now, guys, until previous topics, what did we learn? We learned something called as dissolution of partnership. Yes or no? What is dissolution of partnership? There's something called as dissolution of partnership. What is dissolution of partnership? And there's something called as dissolution of partnership firm. Both are same or different? Dissolution of partnership firm. Please tell me, people, both are same or different? Sir, both are different. What does dissolution of partnership means? Very good. Sir, the old partnership deed, partnership deed that was created between the old partners, that old partnership deed is cancelled. In place of that, new partnership deed has been created. Sir, this will happen in which scenario? It will happen in multiple scenarios such as CPSR. Means what? Change. Whenever there is a change in profit sharing ratio among the existing partner. So this means what? X, Y, Z were 3 partners. Their profit sharing ratio initially was 1:1:1. Then later they agreed that since Z is working more time, Z is working more hard, we will give him more ratio. So the ratio became 1:1:2. So here the partners are same. Only the profit sharing ratio is getting changed. So in that case, the partnership act says that you have to cancel the old agreement, and in place of that, you have to create a new agreement with the new terms and conditions. So whenever the old partnership deed is cancelled and in place of that new partnership deed is created, this process is called as dissolution of partnership. And also this is called as reconstitution. Reconstitution of partnership firm. So whenever they use the dissolution of partnership, not firm, means old agreement cancelled, new agreement created. Reconstitution of partnership firm means the entire firm is reconstituted with the new terms and conditions. So these both are same. Sir, then where and all further we cancel the old agreement and create the new agreement. Next is the topic of admission. So when a new partner is coming in, obviously you have to give him new profit sharing ratio. So when he comes in, you have to give him new responsibilities to him. So all the terms and conditions between the partners will once again change. In that case, what are you supposed to do? Cancel the old agreement. In place of that, create the new agreement. Like that, in the retirement topic, in the death of a partner topic, the old agreement is cancelled. In place of that, new agreement is created with the new terms and conditions. This process is called as dissolution of partnership. So the old agreement is cancelled and the new agreement is created. The only terms and conditions between the partners change. Whereas the business will be alive and will be continuing in the same name. You need not close the business. Whereas dissolution of partnership firm means what? The entire business is closed down and shut down. The economic relation between all the partners comes to an absolute end. Everything over. Break up, finish, tata, bye-bye, go home. This is called as dissolution of partnership firm. So far until previous topic, we understood that how do we do the accounting in case of reconstitution of partnership firm or dissolution of partnership. Now, in this topic, we are going to learn how do we do accounting for dissolution of partnership firm. So in that 3 videos that I gave to all of you, I would have discussed in depth what is the meaning of dissolution. Properly, we have discussed the theory part. What are the different modes in which dissolution of the firm takes place? This is there in the CA book also. If you come down, if you come down, if you come down, the court has the option order dissolution of the firm. The court has the option to order dissolution of the firm. So what modes of the dissolution? This point is also covered, plus dissolution by court also is covered. And also in that video, I've discussed what is the difference between dissolution of firm and dissolution of partnership elaborately. Elaborately, I've discussed. Same point is there in the ICA book also. So I want all of you to go through this and let me know if you have any difficulties. Dissolution of partnership versus dissolution of partnership firm. Dissolution of partnership is also called as reconstitution of partnership firm. Reconstitution of partnership firm. So go through that. Now, why I'm telling you to go through all the theory without leaving a single word is because you might either get a difference between question. You can get a 4-mark question. Please write difference between dissolution versus dissolution of partnership versus dissolution of partnership firm. So in each cases, 4 points you should be in position to write it. Or what they will do is they will take any 1 point from here and they will give you true and false. So in that case, you should be in position to answer true or false, and you have to justify with the reason also. So if you're not understanding theory, you will not be in position to justify the true and false question. So each and every theory part which is there in the chapters, any unit today, everything you should have a conceptual understanding of that. If you have any doubts at this particular point, I'm not able to understand, please explain. Means you come and ask me, I'll explain it. Especially when your target is to score highest, you cannot leave anything with doubt. Wherever you get a small opportunity of scoring, score it, and for that you have to study everything. Don't leave anything. So theory part, I would say all of you to please go through and get back to me in case you have any doubts. Now guys, in dissolution of partnership firm, there are total 3 concepts. In this topic, we are going to learn 3 broad concepts. One is accounting for dissolution. Accounting for dissolution when all the partners are solvent. Then we have second concept, dissolution. Accounting for dissolution when one or more partner becomes insolvent. You understand the difference between solvency and insolvency? What is insolvent? Person to become bankrupt. Bankrupt means what? He doesn't have any money left over. He's become pauper, but he's not beggar. When a person becomes insolvent, doesn't mean that he will come on the road, he'll start begging. No, he'll have something with him to manage his life little bit, but majority everything is gone. And last is piecemeal distribution. Last is piecemeal distribution. So these are the 3 concepts that we are going to study in this particular topic, of which if you are a 12th CBSE student, you would have studied this in the 12th CBSE level. In the 12th CBSE, the video that I gave you, the 6 videos that I gave you, of which the 3 videos you've seen, is a concept that is covering from this particular aspect, where we learned how to do the accounting for dissolution when all the partners are solvent. Now, what is the meaning of solvency and how this is related to this concept? I'll something explain when I take 2 questions from the ICA module and again re-explain. Now, why I asked you to watch those 6 videos is because here, guys, if you look at this particular ICA book under this concept, they have covered only 2 questions. One is example 1 for explanation purpose they have taken, and they have given illustration 1. Only 2 questions are covered under this model. In this, there's so many varieties of questions which is missed to be covered in the ICA module. And if you take the same TS Rival book, there are multiple varieties of questions, different varieties of questions that TS Rival is trying to cover. And this is the basic, guys. Basic means what? When we are going to discuss this concept, no, 90% of the question we will solve using this method only. Only 10% change is there for insolvency. So which means what? 80% of the chapter, the weightage, the understanding depends on how you solve this type of questions. So that is why I made you watch those 6 videos. Out of that, you watch 3, which is good enough. So that 3 videos and the plus the another 3 videos that you're going to watch will give you a very strong base. Different varieties of questions to practice. So in exam, by chance, if they pick and choose any question from the T.S. Grewal book, you'll be in position to answer. So you might be wondering, sir, why will ICA take the question from the T.S. Grewal book? It is not now, it is something which the ICA has been doing from the past also. There have been several chapters where the question has been taken from the CBSE. I'm not telling necessarily it should come from the T.S. Grewal book. There are so many authored books at the 12th CBSE level, like D.K. Goyal is there, Subhash Day is there, T.S. Grewal is there, of which the very famous book, or one among the top book is T.S. Grewal book, which I've given all of you to follow. So we have seen some certain circumstances and scenarios where when ICA is falling short of questions, they are picking up the questions and giving it from the CBSE level. Because there the variety of the questions is good and the level is at par with the CA foundation. So definitely you guys have to practice all those questions and come back to me for doubts. Right? So on that note, let's commence our discussion. So now we are going to discuss very quickly whatever you learned in the 3 videos. No, I'm going to give a quick summary of that in today's class. Accounting treatment. Accounting treatment for dissolution when all the partners are solvent. Yes, I'm going to take a balance sheet. You don't have to do anything. You just have to observe what I'm telling. Just whatever you've studied in those 3 videos, no? I'm just going to give a recap. So it is going to be a refresher for all of you. Just observe, don't do anything. This is a balance sheet. Okay, so I think I've taken everything. Now, guys, so this I've taken few balance sheet items. Online people, are you all with me? Online people, are you all with me?
Yes, sir.
Yes, sir.
Okay, now listen to me very carefully. Guys, dissolution is a process where you close the business. So when you close the business, you're supposed to close all the ledger accounts. So now what happens when you start initiating the closing procedure, except 5 accounts, all the other accounts are closed and transferred to these 5 accounts. The first account that you open to close the books of accounts, the first account that you open is realization account. To close the book, we have to open an account called as realization account. The second ledger which will keep intact as it is loan by partner account. Loan by partner. Loan by partner is asset or liability. Loan by partner. So from firm point of view, asset or liability. It's a liability. Loan given by partner. So who has taken it? Firm has taken it. So firm has to repay in future. So it is a liability. So this is a liability account. You will retain the liability as it is. Third is loan to partner. So loan given by firm to the partner account. So this is asset account. So the loan that is given to partner, we have the right to receive it back in the future. So anything that we get in future is asset. These 3 accounts you will have it. Fourth account will be your capital account. You have fourth account called as capital account, and the last account, fifth account, will be your cash or bank account. The question will tell you very clearly. I want cash. I want bank ledger opened. So if they say that I want bank ledger, then whatever the money is in cash, you have to put everything in bank. If they say no, we want only cash in hand, then whatever the balance is there in the bank, you have to shift it to cash. So guys, you will close all the accounts and merge it with these 5 accounts. And gradually, in the very same order, you will keep on closing the accounts. So now, so dissolution is process where all these accounts which are open has to be converted or has to be merged or subsumed under these 5 ledgers. So now what are we supposed to do? So let's talk about the cash in bank. So cash in bank, I'm just coloring in blue. What will you do with cash in bank balance? You will merge into one account called as either cash account or bank account, one single account. If the question is specific that I want only the bank balance, which means in future all the payment will be done through bank, then whatever money is there in cash, I have to shift it to bank. Or the question specifically says that no, at the end we have to make all the payment in cash. So whatever money is there from bank, everything is withdrawn and shifted to cash. So based on the specific instruction given in the question, you will follow. If there is only one account, bank account, then no problem. That have it as it is. So this ledger, this blue ledger, you will have it as it is. This blue ledger is nothing but your cash and bank ledger, which is the fifth ledger of your records. Then fourth is what? Capital. So capital account balance you will retain as it is in the capital account. So in the capital account, what will be transferred? What did I tell you? We are in the process of closing the accounts. All the accounts has to be closed by transferring into any of those 5. So now current account balance, where should I transfer? The current account balance is the money that belongs to the owner. So any money that belongs to owner should be transferred to the capital account. So current account balances, whether debit balance or credit balance, has to be shifted to your capital account. So then what else we have to transfer to capital account? Next is accumulated profit. P&L credit balance, accumulated profit. So this is the money again belonging to whom? The owners. So any money that is belonging to owners at the time of dissolution has to be transferred to one single account called as capital account. You cannot have multiple scattered ledger. Now if you see, fixed capital is there in the capital account, Other capitals are there in current account. Then profit is there in accumulated profit account. Like that, it is scattered in multiple places. So when we are closing the books, I cannot have the multiple accounts open. I need to close it now. So slowly, I have to close it now. So the partner's money, which is scattered in multiple ledger, has to be brought to one single and common ledger called as capital account. So accumulated profits, P&L credit balance, profit and loss, undistributed profit, plus reserves. Which reserves? Free reserves. The reserve that is belonging to the owner, on which there is no liability, that we have to transfer to whom? Capital. Now let's suppose there is a WCR. What is WCR? Workmen compensation reserve. Now while preparing the dissolution account, there is no liability. Then what will you do? This WCR will transfer to partner's capital account, because that money is coming from where? It's the partner saving. The profit that we earned in the past, instead of distributing that, we shifted that money to WCR account, assuming that in future, if there is any compensation that I have to pay to worker, I'll pay it from this. If not, I will enjoy this money at later stage. So WCR is the money that is technically belonging to the owner. So these three I will transfer to partner's capital account. So the green one goes to partner's capital account. Do you have any problem? Then, sir, what else goes to partner's capital account? There's something called as deferred revenue expenditure. Fictitious asset. What is this? This is a loss item. This is a loss item. Deferred revenue expenditure. What is deferred revenue expenditure? If you have seen my initial partnership classes, I'd have given you the explanation of deferred revenue expenditure. I would have given an example of 5 crore rupees payment to whom? What is deferred revenue expenditure? Oh my God. Revenue expenditure, capital expenditure, deferred revenue expenditure. These three differences, have you seen my videos or not? Should be? No. Both of you? You have seen from beginning. No? Then what is deferred revenue expenditure? Online people, what is deferred revenue expenditure?
Sir, expense which is occurred for a future period of accounting period.
Can you give an example, little bit better version?
Like advertisement expenses and preliminary expenses.
Okay, good. Not preliminary expense is a different concept. Deferred revenue expenditure, different concept. Okay, I'll just tell you quickly. I'll give you a summary. What is revenue expenditure? First of all, what is the meaning of expense? What is the meaning of expense? Cost incurred to earn revenue of that year. Correct, no? 11th CBSE, CA Foundation basic classes, this I have taught. What is expense? Anything that you pay is not expenses. Anything that you spend money is not expenses. There's a clear-cut definition meaning of expense given in the accounts. Any cost that you've incurred, any money that you've incurred, not spent, to earn the revenue of that year, we call that as expense. This is in line of satisfying the matching principle. So what is revenue expenditure? So revenue expenditure is that expenditure that I have incurred to earn the revenue of that year, and the money that I've spent, or the expenditure that I've incurred, the benefit that I'm getting is getting exhausted in the same year itself. In other words, revenue expenditure is that expenditure which is helping me to earn the revenue of only that year. If I remove the word that year, here, what is expense? Cost incurred to earn revenue is expenditure. Now, if cost is incurred to earn the revenue of that year only, then that is called as revenue expenditure. For example, rent I pay 5,000 rupees for the okay, let's say rent I'm paying 50,000 rupees for the entire year. So this 50,000 rupees is what? So this is a cost incurred to earn the revenue. Now you will say, sir, how is this rent helping me to earn revenue? Arey Baba, if I don't pay rent, this premises will not be available to me. If this premises is not available to me, how will I take classes? Only if I take classes, that classes is helping me to earn my revenue. So do you agree that this premises is helping me to earn my revenue? So now 50,000 rent what you paid is nothing but the cost incurred to earn my income. Now please tell me, this 50,000 what you paid, the 50,000 what you paid to your landlord, the benefit you're getting now, benefit is what? I'm able to use this premises for 12 months. So here, the benefit I'm getting only for 12 months or beyond 12 months. Only for 12 months. So this 50,000 is rent only for 12 months, for that accounting period only. If I want to get the benefit for next year again I have to pay him 50,000 rupees. So when you pay any money and the benefit from that is expired in that year itself, then I call that as revenue expenditure. In that case, the entire 50,000 rupees you can record in the P&L of that year. Then what is capital expenditure? So capital expenditure is also cost incurred to earn revenue, but this capital expenditure will help me to earn revenue not only for one current year, it will also help me to earn the revenue for multiple upcoming years. For example, if I buy a projector for 50,000 rupees and the life of this projector is 10 years, which means what? This cost that I'm incurring is helping me to earn revenue for how many years? 10 years. Plus the benefit is for more than one financial year, plus this projector worth 50,000 what I've purchased is either in my name or I have a control over it. I have a control over it. Either I own it in my name, or if I don't own it, I have a control for at least 10 years. So if these two conditions cumulatively satisfy, it becomes a capital expenditure. And on the capital expenditure, you do not record the entire 50,000 in the P&L. You apportion that expenditure over a period of 10 years and record in form of depreciation every year. Right? So what is this capital expenditure? So capital expenditure is nothing but cost incurred to earn revenues of multiple future year. Plus either I own that asset or control that asset. Now, what is deferred revenue expenditure? So deferred revenue expenditure is also cost incurred to earn revenue, not only of current year, of the future year also. For example, I am paying to Virat Kohli 5 crore rupees. I am paying to Virat Kohli 5 crore rupees for what? For doing an advertisement. And Virat Kohli says that, okay, you can use this video for 5 years. You can use this video for 5 years. So I'm getting benefit for more than one financial year. So definitely this is not a revenue expenditure. Do you agree? This is not a revenue expenditure. Do you agree? Now, if this is not revenue expenditure, you will say, sir, this is capital expenditure. But how it is capital expenditure? Because you are not able to own it, no? Or you're not able to control, no? Control asset means what? Anything that I own and control, or anything that I expect to receive in future. Do I own this advertisement in my name forever? Can I do whatever I want to do forever? Do I have the 100% control forever? No. I have a limited control. I don't have anything in my name. Nor this money that I pay will I get back in future. So this is neither revenue expenditure nor capital expenditure. If I talk about let's say building I paid 5 crore rupees. So this is capital expenditure. Why? Because I own it or I have a control over it, and I use it for multiple years to get benefit out of it. At the end, if I sell the building, I'll get some money back. So all this criteria is getting satisfied, means it is capital expenditure. But the money that I'm paying to Virat Kohli, will it come back to me in future? Do I have a complete control on that? Or restricted control? It's a restricted control. So therefore, this cannot be revenue expenditure, nor can this be capital expenditure. So accounting said that such expenditure, which are like revenue, because this is helping me to earn the income of that year, is like revenue. I don't own it. I don't expect to receive this money back in future. So this is partly revenue, partly capital. So they have given a new term called as deferred revenue expenditure. Now, what is the meaning of deferred revenue expenditure? They said that this 5 crore rupees is revenue expenditure only, but like revenue expenditure, I cannot record the entire amount in 1 year P&L. Like in revenue expenditure, what happens? You record the entire 50,000 in that year's P&L. But are you allowed to record this entire 5 crores in the P&L of that year? No. Now, let's suppose the video is valid only for the video ad that Virat Kohli has done for us, in which I have spent this 5 crore rupees. This video is only valid for 5 years. So, matching principle says that this 5 crore rupees, you have to apportion it over a period of 5 years. So, what is my per year expenditure? 1 crore. So, which means my expenditure of 5 crores, I'm deferring it for 5 years. Deferring means what? Postponing. So now, because of this concept of matching principle, this 5 crore rupees, despite being revenue in nature, I'm not able to record this in 1 year. I have to record this in 5 different years. So my expenditure, my revenue expenditure is getting deferred for multiple years. Deferment means what? Postponement. So 1 crore this year, 1 crore next year, 1 crore after that, 1 crore after that, 1 crore after that. So now, imagine we are in the first year. In the first year, what is the entry for deferred revenue expenditure? When I make the payment to Virat Kohli, what is the entry? Sir, to bank 5 crore rupees gone. In that, see, 5 crore rupees is for 5 years. So for 1 year, how much? 1 crore. So advertisement expenditure account debit 1 crore because this will go to P&L. And remaining 4 crore, where will you debit? In the deferred revenue expenditure account. So when you prepare the balance sheet, what happens? In the balance sheet, from the bank, 5 crore is subtracted. Money goes out, no credit what goes out. And debit deferred revenue expenditure, 4 crore will come and sit in the asset side of the balance sheet because you have debited the deferred revenue expenditure. You have debited the deferred revenue expenditure. So which means this account will have a debit balance. And all the debit balance item will come where? In the balance sheet asset side. And this 1 crore rupees will go where? You transfer to P&L account. So what is the closing entry? So P&L account debit to advertisement expenditure. So in the current year, out of 5 crore rupees, 4 crore is deferred revenue expenditure and 1 crore becomes a revenue expenditure. Because this 1 crore rupees what you spend is contributing to revenue of that year. So hence it is going to P&L. And this 4 crore will contribute to revenue in future. So benefit will come to me in future. Whenever I showcase advertisement for next 4 years, I'll get the benefit in future. So therefore, I have to classify this as asset. But this is not a genuine asset. Like building, if I say 5 crore rupees, I would say genuine asset because I own it. So whenever I sell it in the future, I get some money out of it. But this deferred revenue expenditure, even though it is sitting on the asset side, is it of any use to you? If you can you sell this deferred revenue expenditure to somebody and tell me pay me 4 crores my money back? No. So this is a fictitious asset. Means what? This is sitting on the asset side, but this asset is not real asset. Now let's suppose at home your dad is having a lot of properties. Look at the confidence what your dad will have. I am the Raja of so many properties. He'll have a lot of pride in it. Because when he sells a property, whenever he wants, he can encash a lot of money. But can you sell this deferred revenue expenditure anywhere in the market? So even though this is sitting on the asset side, this is a dummy asset. And this is called as fictitious asset, fake asset. In future, this is not of any help to me. So what will I do in the next year? So next year, out of this 4 crore rupees, 1 crore rupees I'll transfer to my expenditure account in form of advertisement expenditure. So what is my next year entry? Advertisement expenditure account debit 1 crore, and now 1 crore I have to minus from this. So from debit, if I have to minus, I have to put in credit. So 2 deferred revenue expenditure 1 crore, and this I transfer to P&L account. So what is my transfer entry? P&L account debit to deferred revenue expenditure. So what will happen in the P&L? In the P&L, not deferred revenue, 2 advertisement expenses. So 2 advertisement expenses, 1 crore will sit in that second year's P&L, and in the balance sheet on the asset side, deferred revenue expenditure from 4 crore minus 1 crore if I do, it becomes 3 crore. So what is the purpose of this deferred revenue expenditure? This is like depreciation. Every year we have to keep on recording. So if I tell you this is a kind of a loss to the business, will you agree? But that loss is not recorded today itself. It is recorded over a period of 5 years. So ultimately, can I say this is a kind of loss only? If I tell this is a loss, no, because this money is spent. I have already paid 5 crore rupees to Virat Kohli. Will I get this money back? No, it's gone means gone. So gradually, only for formality purpose, every year I'll charge 1 crore to P&L. So at the end of the 5th year, what happens? This deferred revenue expenditure will become 0. So now the question is that 2 years is gone. In the deferred revenue expenditure, 3 crore is there. Now the firm is getting dissolved. So what will you do with this 3 crores? This 3 crore is a loss. So you transfer to your partner's capital account. Why, sir? Because this 3 crore anyways goes where? To advertisement expenditure. From that to P&L. And ultimately the loss will be impacted in which account? Finally, capital account. Correct, no? If I record 1 crore rupees as loss as advertisement expenditure in P&L, my profit will come down. If my profit come down, my capital also will come down. Because profit has got direct connection with capital. So ultimately, this money of 1 crore rupees is finally going and getting impacted where? In the partner's capital account. So what did experts say? In case in the balance sheet, if you come across deferred revenue expenditure, fictitious asset, it is a kind of a loss to you, which is yet to be written off. So now we are closing the books of accounts. So no need to create trading P&L. Because when you're closing the books of account, why need to create trading in P&L? So transfer this as a loss in the partner's capital account directly. So this will be recorded in the debit side of partner's capital account. Am I clear on this part? Next is P&L debit balance. What is P&L debit balance? Accumulated loss. The loss which is not distributed to partner. Now distributed. So this will go to the debit side of partner's capital account. So are you clear what and all will go to partner's capital account? So the current account balance will go to partner's capital account. All the reserves except specific reserves which has got liability, except that everything will go to partner's capital account. Then Deferred revenue expenditure, fictitious asset, P&L debit balance, all that will go to my partner's capital account. Are you able to follow online, people? Tell me, people. Are you able to follow?
Yes, sir.
Now, as long as loan to partner is concerned, you will keep that amount as it is in that ledger itself. And as long as loan by partner is concerned, that also will remain in the same ledger itself. So I'll give you one order. In that order, only one by one, you have to finish the ledgers and count. So how many colors so far you can see on the screen? 4 colors. One is aqua blue color. Aqua blue color is nothing but representing the cash and bank balance ledger. So one ledger of that. Second ledger is green ledger. Third ledger is pink ledger. Loan to partner, asset ledger. And next is blue ledger, loan by partner. Clear this point? Now, sir, what to do with the remaining items, sir? What to do with the remaining items? So far, 1, 2, 3, 4 ledgers you opened. So what to do with the remaining assets, sir? Such as land and building. So now, guys, this land and building, plant and machinery, debtors, investment, all the other assets will now be transferred to your realization account. Will be transferred to your realization account. All this will be transferred to your realization account. So what is the meaning of realization account? The name itself says that we're realizing something. What are we realizing? So we're selling all the assets and realizing the money. So why do you need money? Because only when you have the money, you can make the payment to external liability holders. You can make the payment to the owners. You have to repay the money back. No? We are closing the business, boss. So when you're closing the business, whatever assets we have, we'll sell it in the market. We will encash it. And that cash, what will you do? We'll call each one of them. Take your money, your money, your money, your money, and we'll give it back. And finally, whatever leftover money is there, owner will put in his pocket and he will go home happily. So now we're transferring all these assets to realization account so that all the assets which are scattered in multiple ledger, we bring it under one roof and we can realize the money. Now here there is a catch. So land and building will have a corresponding provision for depreciation. So provision for depreciation also has to be transferred to realization account only. Am I clear at this point? Now sometime this debtor account is there, no? We'll have the provision for doubtful debt. So if debtor is going to realization account on debit side, provision also will go to realization account on the credit side. So where the mother goes, son will follow. Land and building, provision for depreciation not separate. Both are linked to one another. Correct? No? So same way, debtor and provision for doubtful debt also linked to one another. Same way, investment and investment fluctuation reserve also are linked to one another. Please be careful. Normally, all the other reserves goes to your capital account, whereas investment fluctuation reserve alone will go to your realization account. And then, like the way you transferred all the assets and their corresponding provisions to the realization account, likewise, all the external liabilities, creditors, bill payable, third party loan, bank loan, any loan you take, everything will also go to your realization account only. Why? Because whatever assets you have sold and got the money, that money you have to use it for the payment of these liability holders. So receiving money and giving money, everything will automatically take place in the realization account. Am I clear at this point? So if I ask you guys, now that you've watched 3 videos of dissolution already, if I ask you what is the nature of realization account from the golden rule point of view, is it personal, real, or nominal? Primarily, it is nominal. Sir, the realization account that we prepared, at the end, what is the result? It is giving me realization profit, realization loss, realization gain, realization loss. So ultimate nature of that is nominal account. So if you get a true and false question, realization account is a personal account or a combination of personal and real account. False. It is a primarily nominal account because ultimate, what is the result of that ledger? To find out profit and loss. So any ledger that gives me profit and loss of anything, be it trading and P&L account, be it realization account, be it revaluation account, all these three are nominal accounts because the end result is what? Either profit and loss on each item. Now let's take one question, and with the help of that, I'll make you understand all the journal entries and how to prepare the realization account. Please take this question, which is there on your page number, guys. 10.206. 10.206. They have given this example. With this example, I'll make you understand all the journal entries followed by those ledger 5 accounts. Only people, are you all comfortable so far?
Yes, sir.
Yes, sir.
Only 2 confirmations I got so far online. Others no response. May I know why? What are you all doing, others? Yogi, Shweta, Selina, Isha, Harini, Gurleen, Danusha. I think Trisha and Jana only responded. How about other people? Are you all there?
Yes, sir.
Yes, sir.
Yes, sir.
Why no response? Please respond whenever I am asking. Now, so guys, they've given balance sheet of Fast and Quick as at 31st December 2021. Okay. So we look at the data, guys. Asset we have plant and machinery. Okay. Patent, stock, sundry debtors, provision for doubtful debt, cash. Okay. On the liability side, we have sundry creditors, fast loan, that is partners loan, general reserve, capital of Fast and Quick. Okay. Below, what are they telling? So Fast and Quick share profits in the ratio 3:2. Okay. On 1st Jan 2022, the firm was dissolved. Oh, ho, ho. On 1st Jan, the firm was dissolved. So this is a question of dissolution. Sir, we didn't even know that, sir. Anyways, Fast took over the patent. Fast took over the patents at a valuation of 5,000. Now, what is this? We'll do when I prepare the realization account. The other assets realized as under, which means what? The plant and machinery, which is worth 40,000 rupees in the balance sheet. Now, when you went to the market and sold it, people paid you how much? 45,000. So it is realized means what? You realized it in form of cash or bank. So since cash is given, I will say this is realized in form of cash. Stock is realized to 22,000. Debtors have realized 18,500. So total money that you received is 85,500. Okay. Sundry creditors will paid off at a discount of 5%. Now, what this means, I'll tell you. The expenses amounted to 3,500. Now, you have to prepare the accounts. You have to prepare the following accounts. Now, please tell me, people, when we are preparing accounting for dissolution, when I'm doing accounting for dissolution of a firm, all the accounts has to be closed and has to be subsumed or transferred to 5 accounts. Which are those 5 accounts? Realization account, loan by partner account, loan to partner account, capital account, cash
Bank.
So my question goes to all of you. Plant and machinery, what will you do? Will you have in the same account ledger? Will you transfer it? So we'll transfer it. Where will you transfer? It's a realization account. Very good. Patent, realization account. Stock, realization account. Sundry debtors, realization account. So provision for doubtful debt, no sir, this will not go to realization, sir. Provision for doubtful debt will go to capital account. If mom is going, son will follow. Correct, no? So this will also go to realization account. Cash will also go to realization account, sir. No, sir, we'll take it to realization account, sir. No, cash you have to have separate ledger, because in cash ledger you have to separate, you have to have accounts, how much money is received from where, to whom we have to pay. So we have to have a separate account to keep a track of from where the money is coming in and to where the money is going out. So we have a complete track of it. That is why we keep as a separate ledger. So this will retain in the cash ledger itself. Then so sundry creditors. So sundry creditors will be transferred to realization account. Then fast loan. What will I do with the fast loan? So this will be there in the loan account itself. General reserve. What do you do with the general reserve? So I transfer to capital account. And the capital account balance will be in the capital account itself. So how many colors can you see on the screen? How many accounts totally you have to prepare? Realization account 1, cash account 2. So 2 here, asset side. And fast loan account 3 and capital account 4. So 4 accounts. So open 4 accounts, please. Please open 4 ledgers. Please open 4 ledgers. The realization account will be little bigger one. Realization account, debit side, credit side. Next is loan account. Fast is loan account. Debit, credit. Then is cash account. cash account, then capital account. You can do one after the other, guys. You can do one after the other. 4 ledgers, one after the other. So first step, what will you do? For these 3 ledgers, you'll write the opening balances. You'll write the opening balances. So fastest loan account, 10,000, guys. The balance sheet. Okay, this balance is there on the liability side. So opening balance, where will I record? Debit side or credit side? Credit side. So by balance brought down 10,000 rupees on the credit side. The moment you record this, put a into mark. So you'll have a control that, okay, I've recorded this. Next, cash account. Cash account is asset balance, asset is debit balance. So asset side, debit side, to balance brought down. So what is the cash balance?
6,000, sir.
6,000 rupees, sir. Then come to partners capital account. How many partners are there? Sir, fast and quick, 2 partners, sir. So balance brought down on the credit side. So by balance brought down. By balance brought down. How much?
30,000 and 25,000, sir.
Yes. 30,000, 25,000. The moment I record this, I'll put a cross mark for this also. I'll put a cross mark for this also. Now, what are you supposed to do, sir? Now, first transfer all the assets and liabilities to realization account. So you have to do the journal entries also along with me, all of you. Here's the first entry. The first entry. Plant and machinery, guys, is currently on the asset side, having a debit balance. To close this, what should I do? Put the plant and machinery on the credit. So to plant and machinery. So to plant and machinery. So if you're putting this in credit, something should be in debit. Now, what should be in debit? So realization should be in debit. So realization account. Realization account debit to plant and machinery. So one asset is going down, reducing in the plant and machinery account and increasing in the realization account. So what is the value? 40,000.
40,000, sir.
Plant and machinery. What is the journal entry? Being plant and machinery transferred to realization account. Sir, instead of passing one single journal entry, can we pass instead of passing multiple journal entries, can we pass single journal entry for transferring all the assets? It is possible. In exam, you should do that only. Here I'm doing separately. But in exam, what you do is together you have to record all the asset entries in one shot. Sir, how, sir? Realization account debit, to plant and machinery, to patent, to stock, to debtor. So one entry, one single narration, your game is over. You will save time. If you want, you can do that here also. Similarly, also people, patent is on the asset side. Asset is having a debit balance. To close debit, to close the patent in debit, I have to put patent in credit. So to patent, how much? So
6,000, sir.
Next is
Stock.
Stock currently 25,000 in debit. To close, I have to put stock in credit. So to stock 25,000 rupees in credit. Debtor 19,000 in debit. To debtor 19,000 in debit. Now, out of oversight, do not put provision for doubtful debt also on the in this journal entry, because provision for doubtful debt is a liability. This is having a credit balance. Do you understand why this provision for doubtful debt is coming on the other side? Normally, the provision for doubtful debt is supposed to come on the liability side. But on liability side, doesn't make sense, no? Because liability means what? Anything that I have to pay in future is liability. But this provision for doubtful debt is not a liability. But this is having a credit balance because of the accounting entry that we passed. So what we do, we manually regroup to the other side. So this balance sheet is like your mathematics formula. This is left hand side. This is right hand side. And the center line is like equal to. So in mathematics, from left hand side, if I take anything to right hand side, plus will become minus. So this PFD was positive credit balance. I took it to other side, became less. So just because it is coming on the asset side doesn't mean this debit balance. In asset side, this less means what? It is credit balance item. So whenever I pass entry for the credit balance item, that time I'll pass the entry for provision also. Am I clear with this point? Online people, am I clear with this point?
Yes, sir.
So on the asset side, if you look at people, I've transferred everything except the provision for doubtful debt. So the debtor, please don't transfer at 18. Debtor, you have to transfer at the gross value, 19,000 rupees. Because debtor's ledger balance is 19,000 and provision for doubtful debt ledger balance is 1,000. So two separate ledger balances means two separate entry has to be passed. So this 18,000 is net amount only for our understanding purpose. So when you pass the journal entry for transferring debtors, do not write 18,000. Am I clear with this point? Okay. So here what we write, being all the assets transferred to realization account, being all the assets transferred to realization account. Now in the realization account, please post the entry. So to plant and machinery, to patent, to third one is stock, and fourth one is debtor. What is the value of plant and machinery? Sir, 40,000. Patent is 6,000. Stock is 25,000. Debtor value is 19,000.
20,000.
So now guys, all the assets which were originally in different individual name, now what have they done? Let's suppose this is a particular asset, plant and machinery. The cover was plant and machinery. What did we do? By passing this journal entry, we removed the plant and machinery cover and we put a new cover called as realization account. So now all the assets are sitting where? In one house under common cover called as realization account. So this is sitting on the debit side. To create the asset in any particular account, we have to give a debit. To record the asset in any particular account, we have to record on the debit side. That is what we have done. Clear with this point? We are clear, sir. Next, what are you supposed to do? Next is all the credit items, credit balance items, such as provision for doubtful debt, creditors. These both we need to transfer to realization account. So the provision for doubtful debt and the creditor is a credit balance item. To close the credit balance item, I have to put all them in debit. So what is my debit, sir? It's a provision for doubtful debt account. I have to debit it, and sundry creditor account also I need to debit it. So when I do that, what will happen, people? From the balance sheet, the creditors will get knocked off. From the balance sheet, the provision for doubtful debt will get knocked off, will get removed from the balance sheet. How much, sir? 1,000 and 20,000. 1,000 and 20,000. So what is the total? 21,000. So all this is transferred back to realization account. To realization account. How much, sir? 21,000. And what is the total of the asset, people, which are transferred to realization account?
90,000, sir.
90,000. Okay, wonderful. So now please go to realization account. Please go to realization account. So buy provision for doubtful debt. How much? 1,000. Buy sundry creditor 19,000. Any problem here? Any problem, online people?
No, sir.
Total is? Sundry creditor is 20,000. Okay. Sundry creditor is 20,000. So let's understand the impact in the balance sheet. Is the moment you transferred all of them to realization account, now all this gets eliminated from the balance sheet. All this is getting eliminated from the balance sheet. Means what? There's no longer plant and machinery in the balance sheet. There's no longer patent in the balance sheet. No stock in the balance sheet. No debtor in the balance sheet. No provision in the balance sheet. No creditor in the balance sheet. No. That's all. All this is being converted to your realization account. Now it is sitting in the realization account. Sir, what about cash? Cash we have kept as it is in the cash ledger. So this will continue. So what about fast loan? This is also there in the loan account as it is. What about general reserve and capital? All this is there in capital separately. Clear with this point? Now what happened, people? Okay. Now what is pending here? So general reserve is still pending. General reserve is still pending. We did not pass the general reserve entry. So what are we supposed to do with general reserve? So we are supposed to transfer the general reserve to partner's capital account. So what will be the transfer entry? What will be the transfer entry? So general reserve is currently in credit. To close the general reserve, I have to put general reserve in debit. So general reserve account will be debited. And this money is going back, sir, to all the partners in their profit sharing ratio. So in the profit sharing ratio, we are supposed to distribute this. So what is the profit sharing ratio? 3:2. So general reserve account debit to fast capital and to quick capital. In the ratio 3:2, please tell me what is the amount. 6,000, 4,000. Immediately in the capital account, please pass this entry. In the capital account, please pass this entry. So by general reserve, 6,000, 4,000. So this general reserve also getting eliminated from the balance sheet. So in balance sheet, finally, what do you have? You have cash account, you have fast loan account, and then capital account. Only 3 accounts pending along with realization account. So 4 ledger only pending as. So all the other ledger has been closed. Only 1 ledger is pending. Sorry, only 4 ledgers are pending, which is realization account, capital account, cash account, and loan account. That's it. So if you close this ledger, game over. So first, which ledger will you close always? First, we'll close the realization account, because in the realization account you have the amount that you have to pay to the third parties. All the third party amount is coming here. So please tell me, people, whenever you close the business, in what order will you make the payment? So this order is given by whom? Section 48 subsection B. Yes, very good, you're remembering sections. This is there in your CA book also, foundation book also. It says that whatever the assets you have sold and the money is realized, you have to pay it in the, apply it in the following order. First, you have to utilize the money for paying the third parties, that is outside parties. Who is the example of third parties? Creditor or bank loan. Please tell me if any loan you have taken from partner's wife. So partner's wife is internal party or third party? Third party only. It's third party only. So partner's spouse loan or partner's wife loan is also outside party. First, you have to make the payment to them. Second, you have to make the payment to whom? If you have taken any loan from the partner, so that money you have to settle them first. So pay each partner what is due to him on account of loans or advances. So whatever money you are supposed to pay to the partner, that money you will pay to him. Then once you make the payment of all the liabilities, whatever money is balance left, you have to pay to the partner's capital. Whatever the partner's capital balance is there, no, to that you have to pay. And even after that money is left over, that is surplus profit that you distribute in the profit sharing ratio. The same statement is there in the ICA book also. You have to search it somewhere, but it's there. I just read somewhere. Section 48. Paying the debts of the firm to third parties. Then paying each partner what is due to him in respect of advances, which is distinguished from capital, means other than capital. If the person is given the money, which is nothing but loan amount, so that you have to pay him first. Then whatever money is belonging to the owners in form of capital, you pay that. Even after settling their capital, extra money is left over, then you distribute in their profit sharing ratio. Any residue means extra over and above the capital, have more money, which means the asset what is there in your balance sheet, no, you have sold it and got super money, lot of money over and above the asset value. That is called as extra money that you distribute in the profit sharing ratio. So now, what is the order in which you have to close the ledger? The first ledger that you'll close is realization account. Why? Because in the realization account, you have the money, you have the list of the party, you have the list of third party to whom you have to make the payment. In the realization account, you have all the third party list. So as per section 48 subsection B, you have to first close the realization account. Means what? Closing the realization account means what? You are making the payment to realization account. So when does the realization account close? When the assets are sold and money received, and from that money when you make the payment to the party, and that entry when you record in the realization account, that is when the realization account is closed. Second, which account will you close? You have to receive money from the partner, that is loan from partner. If you have given any loan to partner, you have to receive from that. So loan to partner, you have to receive the money from them. This is the second account that you have to close. First, I will try to receive money. Third account I'll close is loan by partner. So if any loan is given by the partner, which I have to repay, now I have to repay. Why? Because section 48 subsection B says what? First make the payment to third party, then make the payment to loan of the partner. Then finally, capital account and cash account together. So this is the order that which will proceed. Clear at this point? So now we have to close the realization account first. Now the question is given information about the realization. The question says that the other assets, forget patent. Patent will come in some time. The question says that all the other assets except patent. Except patent means what? Plant, machinery, stock, and debtors has realized so much of money. So what is the journal entry when I receive money against it? Sir, when money is coming in, cash account, debit. Now do not put plant and machinery account. Why? Because the plant and machine ledger is closed. Sir, how is the ledger is closed? Like this. If you look at the ledger, people, if I look at the plant and machinery ledger, plant and machine ledger was having what balance in the balance sheet? What is the balance of plant and machinery? 40,000 rupees. So on Jan month, the opening balance was 40,000. Then what did you do? You passed an entry for transferring that to realization account. What is the entry? Sir, realization to plant and machinery. So in the plant and machinery account, by realization, 40,000 rupees. Now both side 40,000, 40,000. There is no balance. So this 40,000, then where did it go? This plant and machinery which is there in a business, where did it go? It went to my realization account. So from where did you sell it? You sold it from the realization account. So money is coming where? Into the realization account. So what entry will you pass? Cash account debit to realization. Now the plant and machinery is having what wrapper? What is the wrapper it is wearing? Sir, realization wrapper. To increase asset, debit. To decrease asset, credit. Debit what comes in, credit what goes out. So when I sell the asset, people, cash is coming in. But what is going out? Plant and machinery going out. But I cannot put plant and machinery because the wrapper new name is realization account. So it will be to realization account. So cash account debit to realization account. Clear this point? So you have to pass the entry for this. So what is my fourth entry? Cash account debit to realization account. Now, if you take the entry for stock, you take the entry for debtor, everything is same, guys. For stock, what is the entry? Again, cash to realization. For debtors, what is the entry? Debit what comes in cash. And who is giving the money? Credit the giver. Sunny debtor is the giver. But I cannot put sunny debtors because I've wrapped up with the wrapper of realization account. So again, cash to realization. So you pass three different entry: cash to realization, cash to realization, cash to realization, waste of time, energy. So what will you do? One single entry, cash to realization, and all the three amounts you will add. All the three amounts you will add. So what is my total amount? 85,500. So 85,500. 85,500. So being money realized, being cash realized upon disposing plant and machinery, stock and debtor, like that, you will give a narration. So in the realization account, what is my entry now? Yes, buy cash. Buy cash. Now, if you write individual entry, then for each individual entry, buy cash, buy cash, buy cash. So I'm selling 40 asset means 40 times I have to write. How much waste of time? So what will we do? We'll write buy cash. Below that, we'll give a description. Okay, for plant and machinery, we got so much. For stock, we got so much. For sundry debtors, we got so much. Like that, we'll give a description in the inter column. So what is the money that you receive in plant and machinery? 45,000 rupees. Stock, how much did you receive? 22,000 rupees. Debtors, how much did you receive? 18,500. 18,500. So total, how much money you received? 85,500. Any problem? Immediately in the cash ledger also you have to record, no? What is the journal entry in the cash ledger? So to realization account. To realization account. 85,500. 85,500. Any problem? Online people, any problem?
No, sir.
Always your realization account, guys, will be divided into 4 quadrants. Your realization account is divided into 4 quadrants. In the first quadrant, you record all the assets. In the second quadrant, you record all the liabilities to whom you have to pay. In the third quadrant, whatever assets you've recorded, no, the question will tell you that this much money is coming. So realization of that will come in the third quadrant. And whatever money is come, now you have to pay. So in the fourth quadrant, you record the payment of the liabilities. So it goes in circle. So first quadrant, asset. Second quadrant, liability. Realization of asset, payment of liabilities. Honest people, is this cycle understood? Is this cycle understood? Hello?
Yes, sir.
Everybody, please respond quickly, fast.
Yes, sir.
Yes, sir.
Yes, sir.
Now, Question has given one information about one asset called as patent. It says that Fast, who's Fast, is one of the partner. He took over the patent worth 5,000 rupees. See, anywhere in the partnership act have they told that when you are closing the business, you have to make the payment to the partner only in form of cash? He says that no, to the extent of 5,000 rupees, you give me the patent. So we can settle the partner either through cash or bank, even in form of asset also. Through asset also we can settle. So now what? Fast is taken over the patent worth 5,000 rupees. So means what? If it's taken goods worth 5,000 rupees or asset worth 5,000 rupees, to that extent, I don't have to pay him in future. So what will be my entry here? Fast took over the patent. So when I give some asset to the partner, it is as good as repayment of capital. So when you repay the capital, capital will be debited or credited? When you repay the capital account will be debited. So Fast is capital account debit. Fast capital account debit means what? To the extent of 5,000 rupees, I am settling his capital account. Nowhere in the act, nowhere in the rules, they have said that you have to make the payment to the partner and only settle. The settlement mode can happen in cash mode, check mode, or even kind mode. So this person is settling his capital on the kind mode. He's taking patent, 5,000 worth of patent with him. So now patent is covered in which wrapper? Realization account. Having debit balance. Now to close, what should I do? Credit. So to realization account 5,000. So in the realization account, buy Fastest capital. Buy Fast capital account. How much? 5,000. So what did I tell you? If asset is here, its realization will come where? On the opposite side. This is the realization. Now in the capital account, what will happen? In the capital account will be to realization 5,000 rupees. Now what is the debit part? Debit means decrease in capital. Credit means what? Increase in capital. So which means what? To this extent. Now total amount, how much I have to pay to Fast? Totally how much amount I have to pay to Fast? 36,000 rupees. In that 5,000 is already paid in form of patent. So how much you have to pay him? 31,000 only in form of cash. I'm just trying to make you understand through an example. That's it. So if any partner takes over any asset, it is as good as repay him in form of capital through kind. Online people, are you clear with this point? Hello?
Yes, sir.
Okay. Now what is happening? Now the question says that Sunday Creditor were paid off at a discount of 5%. Now means what? What is the total amount that you pay to Creditor? Total amount that I have to pay to Creditor is 20,000 rupees. Now what did we do? We went and approached Creditor. See, we are closing the business. We are not going to continue in future. So this 20,000 is there now. So we have so much long-term relationship. So for that, can you give me some discount? Because we are already dissolution process. We are running short of money. So please give me some discount. So he says that no problem, 5 rupees discount I'll give you. Sorry, 5% discount I'll give you. You pay me the balance money. So what is 5% discount on to 20,000? 1,000 rupees. So 1,000 rupees gone means how much money we have to pay? So 95,000 only. Sorry, 19,000 only we have to pay. So what is the payment entry for 19,000? Sir, we are making the payment. So to cash. Now this creditor is wrapped in which ledger? Realization ledger. Having credit balance. To close this, I have to give a debit. So realization account debit. Realization account debit 19,000 to cash 19,000. So in realization account to cash. In realization account to cash. In realization account to cash. How much? 19,000 rupees. Now, how many of you still have doubt telling that? So 19,000 you recorded, but what happened to this 1,000 discount? You didn't record anywhere, no? How many of you have doubt like this? If you have doubt, then you have not seen my video properly. 3 videos. This was explained in that 3 videos. So many things I've explained in those 3 videos. What did I tell you? Realization account is nominal account. So listen to me very carefully. In the realization account, I'm just focusing on the creditor part. So creditor, where did you transfer? Sir, by creditor, how much? 20,000 rupees you record on the credit side. How much payment did you make? To cash, you made the payment 19,000 rupees. When I balance this ledger, what is the balance? 1,000 rupees is the balance, which is nothing but realization, profit or loss. 20,000 worth of liability, you paid only 19,000 rupees. So 1,000 rupees is what? To realization profit. So when you sell the asset at higher value, lower value, whatever the profit and loss is there, no, you don't have to apply your brain. The realization ledger is drafted in such a way that you put the amount on two sides and balance it. Automatically, the ledger will calculate the profit and loss and give it to you. You don't have to put your mind only. Correct? No? So this is realization profit. What will you do with the realization profit? Transfer to partner's capital account. So that's 1,000 rupees which I did not pay, guys. This 1,000 rupees which discount I got from the creditor is a gain for us, no? And gain, who should enjoy the gain? Partners will enjoy the gain. Now, same one more thing I'll explain. For pay, plant and machinery. Plant and machinery worth is how much in the book? 40,000. How much money you got it? 45,000. So when I prepared the relation account, now I'm focusing on plant and machinery. So now in the relation account, plant and machinery, how much money did you transfer? So two plant and machinery, 40,000 you transferred. When you realize the money by cash, how much money did you realize? 45,000. So you realize that profit. So that time, why did you ask me, sir, 5,000 gain entries were? Why? Because you don't have to do anything. You recorded cost on one side. You recorded the money realized one side. When you automatically balance the realization account, it will calculate the profit of 5,000. So this is to realization profit, the balancing figure automatically. So in the realization account, if you are selling the asset at the higher price or lower price, if liability you are paying more or less, because of that, if it is resulting into gain or loss, you don't have to sit and break your head. You just follow the realization account, prepare as per what is required to be prepared, and balance the ledger. It will totally calculate the net realization profit and loss. So here, this is the realization profit of creditor. This is the realization profit of selling the plant and machinery. So total profit is how much so far? 6,000. So like that, when you add all other accounts, I mean, patent, debtor, everything, and totally when you prepare the realization account, the net result will be the overall profit and loss of the all assets and liabilities put together. Are you clear? Last one more thing. Stock is worth how much? Stock is worth 25,000. So you went and sold the stock in the market. How much did you receive? Only 22,000. So loss of 3,000. Now look at this realization ledger. What is the entry for stock in the realization account? You recorded two stock. How much? 25,000. Further, how much money did you receive by cash? By cash 22,000. So difference 3,000 is loss. So loss always comes here, no? Even in the P&L account, loss will come on the credit side, profit on the debit side. So by realization loss. So the realization account will automatically calculate the profit and loss for you. You don't have to apply your mind at all. But we should know the concept, no? Tomorrow when you go for articleship or when you're encountering the same situation in the CA intermediate, if you don't know the logic behind it, what is happening in the back end, that is not explained, what will happen? That is the difference everywhere you go. People will explain you the format, but nobody will explain you the concept behind it. What is the impact of any transaction? What is the ultimate impact that account, that vision people don't develop? In CA, guys, when you record an entry, if you're not able to develop a vision that how and what this will impact in the financial statement, in which account, what impact will have finally, that vision you're not able to develop, you cannot become a good chart accountant. You'll become an accountant on the records. Degree will have, but nothing will be here. Imagine a scenario, you become CA. Your junior working in your office, below junior who's working under you. He is preparing that time for CA foundation, or let's say CA inter, and he's coming and asking this type of question. Akka, this stock is around 25,000 worth of stock, only 22,000 came ka. 3,000 loss. Stupid fellow, not recording anywhere. That time, what will you say? Oh, Pratik sir also didn't teach me. I also had this doubt, but sir didn't teach me. Cheating fellow, he took money, he didn't teach me. Will not curse me. But now, will you curse me after explaining? So please understand the concept. Do not by heart. Anyways, so now guys, the cash payment entry what you've made here, this is the payment of the creditor. Without forgetting, record the entry in the cash ledger also. So by realization account, which is sundry creditors payment. How much? 19,000 payment you have made it. 19,000 payment you have made it. Calling people comfortable so far?
Yes, sir.
Yes, sir.
The expenses amounted to 3,500. Now, which expenses are they talking about? Is whenever the business is closed, no, there are a lot of legal formalities that you have to do. So that legal formalities cannot be done free of cost. For example, for you to properly carry out the dissolution process, you may have to appoint a lawyer or a chart accountant or a company secretary to do this process neatly. So you have to pay some fees to him, fees to lawyer, fees to CA, fees to CS. Second, you're going and selling this plant and machinery stock in the market. So you don't have time to go and sell it. So you'll appoint an agent to pay, get all the money by selling this. So to him, you have to pay commission. So there are documentation work that you have to do. The basic documentation paperwork that you have to do. So that paperwork cost. So many things like that is involved. So all that expenses put together is 3,500. Now here the question is silent. This 3,500 who paid? They're saying that expenses amounted to 3,500. So the question is, who is bearing this expense and who is paying this expense? Now listen to me very carefully. Realization expenses means what? The expenses that is incurred in the process of closing the business. The legal works that we are supposed to do. So here the realization expense, you should ask yourself two questions. Who will bear it? Who will bear it? I'm giving a chart, make a note of it. Who will bear it? Who will bear it? If the answer is firm, they have to come here. If the answer is partner, they have to come below. Who will bear it if your answer is firm? Then next question. Who will pay it? Who will pay it? What is the first question? Who will bear it? Firm is bearing it. Next question is who will pay it? Again, two options. Sir, firm itself is paying, or at the time firm was not having money, so it requested partner, you pay it, I'll pay it to it future. So partner is paying it. Now, what is the entry? Now, what is the question? Sir, who will bear it? Sir, it said that firm will bear it. Who is paying it? Firm is paying it. So firm is bearing it, firm is paying it. Bearing means what? The person who's bearing the expenditure, the person who's bearing the amount is the person who will record the expenditure. If I ask who is bearing it, means we want to identify who's the person who's going to bear the expenditure. So he has to record the expenditure in his books of account. Now, for example, now we all are after the class going to Annapurna. We're not going, I'm just saying, imagine we're going to Annapurna. Now, who is taking to Annapurna? Jain is like, okay, sir, we're not going. Okay, sir. Imagine we're going to Annapurna. Who is taking all of it Annapurna? Am I compelling or you guys compelling? I'm compelling. So whoever is compelling it, that person has to pay. So if I am taking it, who will bear the expense? I'll bear the expense. Bearing the expense means what? Who will record the expense? I will record the expense, not you. Maybe I can say a different thing. I'll pay it, ma, but now pocket empty. You pay it, I'll pay it later. That's a different story. But who will bear it means what? The person who is bearing it only has to record the expense in his books of accounts. Now we said that in the first scenario, firm is bearing it. If firm is bearing it, what will be the expense entry? Sir, any expenses that happens in the business has to be debited. Debit all expense and losses. So realization, expense, account, debit. So you're debiting the expense in the firm book. Why? Because firm is bearing it. And who is paying it? So money is paid by firm only. So to cash account. So if firm is bearing it and firm is paying it, the entry will be realization expense to cash. If the question is who is bearing it, firm is bearing it. Pratik sir is taking you to the treat. But Pratik sir's purse empty. So Pratik sir says, student, you paid. I pay it you later. But whose treat it is? My treat. So firm has to bear the expense. So if firm bears the expenditure, what is the entry? Realization account is debited. Realization expense is debited. Why? Because it is firm's expenditure. But at that moment, firm did not have money. So it requested the partner to pay the money. So when the partner pays the money, we have to remember to make the payment to partner in future. So anything that we have to pay to partner in future has to be routed through partner's capital account. Partner's capital account credit. Am I clear with this point? Online people, are you clear with these two journal entries, 1 and 2?
Yes, sir.
Yes, sir.
Now, who will bear it if the answer is If the answer is partner, now here there are three possibilities. Now here there are three possibilities. 1, 2, and 3. First question. Who will bear it? Partner is bearing it. Next question is, who will pay it? Who will pay it? If the answer is firm, if the answer is firm, who's bearing it? Who's bearing? Partner is bearing it. Who will pay? Firm will pay. If firm pays, money is going out of the firm. So cash, to cash, money is going out. Now, should I record realization expense? No, sir, because we are not bearing it. It is not our expenditure. It is partner's expenditure. But we are paying it, which means we have to recover the money from partner. So partner, unless and until he pays me the money, I'll catch hold of his Kudumi, which is his capital account. So I will debit his partner's capital account. I'll debit his partner's capital account. So partner's capital account debit to cash account. Partner's capital account debit to cash account. So partner's capital account debit means what? We are attacking or reducing this much money from his capital account. We're reducing this much money from his capital account because we have paid it on his behalf. So until he pays me the money, I will attack his capital account. Next, same question. Sir, who is bearing it? Partner X is bearing it. Who will pay? Partner X only is paying it. So partner X is bearing, partner X is paying. Everything partner is doing. Should I record anything in my books? So in my books, there will be no entry. Guys, all this entry, we are talking in our books. So when partner X is bearing, you are going to Annapurna on your own. You are paying it. Why will I record in my books of account? So no entry in the firm's book. Clear with this point? Honest people, clear with this point? Hello?
Yes, sir.
Next, same question. Who is bearing it? Partner X is bearing it, but partner X does not have money at that moment. So it requested firm. Firm also said, I also don't have money. Then we went to whom? There's another partner called as partner Y. So partner Y paid on behalf of partner X. Now, partner Y will not pay chumma like that. Partner Y will ask, firm, see, he's coming asking money. If you take the guarantee, then I'll pay the money or else I'll not pay the money. So firm says, no, pay, I'll take the responsibility. So who is saying the word? Firm is saying the word, you pay the money to partner X, I will take the responsibility to pay you in future. So firm is taking the responsibility to pay the partner Y in future. So anything that the firm has to pay in future is liability. And to create a liability, we have to give a credit to partner Y's capital account. So firm has to pay this money to partner Y in future because firm took the responsibility and give a commitment to Y that Y you pay the money to X now, I'll give it to you in future. And now X has to remember to collect money from, now the firm has to remember to collect the money from whom? Partner X. So until the partner X gives me the money, I'll catch hold of his capital account. So partner X's capital account debit to partner Y's capital account. Any doubt in this, please? Five
No,
scenarios.
sir.
Are we clear with this 5 scenarios, people?
Yes, sir.
Very, very important. Any kind of realization expense, let them ask. If you remember this chart, if you understand the logic, you will be able to crack the journal entry on the spot. The same thing will apply here. It says that the expenses amounted to 3,500. Two questions you have to ask. Who will bear it? Who will pay it? The question is silent about it. Firm will bear it, firm will pay it. If firm is bearing and paying, what is the journal entry? Realization account debit to cash. Very simple. See? So come back here. In the realization account, in the realization account, to cash. In bracket, you can write realization expense, and this is sundry creditors expense. How much? 3,500. 3,500. Without forgetting in the cash account, by realization, realization expense 3,500. Yes, realization account is nominal account. Debit all expense and losses. Debit all expense and losses. See, now we are closing the books. There is no point in opening the accounts. Listen. If I write the entry, realization expense account, debit to cash and bank, and transfer this realization expense to realization account, so much extra effort not required. Directly one single entry record in the realization account directly. Record it in the realization account directly. So fifth entry. This is the payment entry for creditor, no? Okay. So sundry creditor account debit, realization expense account debit to cash. So 19,000 you paid to creditor, 3,500 is realization expense. Total how much paid? 20, 21, 22, 22, 500. Correct? No? Okay. Is anything else is mentioned in the question? Everything we recorded. This point taken care of, creditor's point taken care of, this box is taken care of, patent is taken care of, everything is taken care of, people. Now what are you supposed to do? Sir, balance the realization ledger. Now please balance the realization ledger and tell me what is the profit and loss on realization. Please tell me what is the profit or loss on the realization. No, wait. One thing you have to do. For a second, forget today's dinner. Tomorrow's breakfast also you forget. But you cannot forget one point. Whenever you balance the realization account, you have to do one checking. What checking? Sir, we have mentioned so many asset items, no? Whether from all the assets money is received or not received, a check. Sometimes question what they will do is, they'll give you one asset. Whether the money is realized or not, the information is not given. The question is silent about it. Sometimes they'll give you bank loan is 2,000 rupees. But whether the bank loan is paid, the information is not given. So in that case, what am I supposed to do? In other words, they'll give you a list of asset, but anywhere in the question, nowhere in the question they'll mention whether the money is realized. Or sometimes they'll give you a liability like bank loan and they will stay silent whether the money is paid or not. So we have to see whether the information is given or not given like this. So now, please tell me, check and tell me people, plant and machinery, 40,000, whether realized? Sir, realized. Money realized. Patent realized? Yes, sir. Realized from partner's capital account. Stock, is it realized? Realized. Data realized? Realized. So all the assets have been realized. The information is properly given in question. PDD, guys, 1,000 rupees, will you make the payment? This is a loss. This is a loss. So this will not come into your payment side. This payment side never it will come. Sundry creditors, 20,000 rupees. Have they given the information of the payment? Yes. So which means now you are good to balance the realization. Now listen to me very carefully. I'm just giving a small example. In case, let's suppose, two building is given 50,000 rupees. Listen to me very carefully. Two building also is given 50,000 in the question. But nowhere in the question have they told you the building is realized so much money karke, it is not given. In that case, what will you do? The first assumption given by ICA is that the building is realized at the zero value. In the CBSE video that you watch, I would have told you that the building is realized at the book value. The tangible asset is realized at book value. But in the CA foundation, the asset information about realization, the realization information about the asset is not given, means the value of the building realized is zero. On the other hand, let's suppose there is a bank loan of 5,000 rupees and nowhere in the question they have mentioned whether the bank loan is paid. In that case, you will assume and make the payment for bank loan because liability, the third party liability, you have to pay. Whether the question says or not says, you have to pay. So when the third party information about payment is not given, you have to pass the payment entry on your own. But sir, for asset, if they don't give any information about realization, it means it is realized at zero value. Am I clear with this point? Online people, am I clear with this point? Whether
Yes, sir.
a tangible asset, tangible asset, if there is no information about the realization, it is realized at zero value. It is realized at zero value. This is one important step. Now, after checking this only, you will do the balancing of the realization account. Without this, you will not do the balancing. Which side total is more? Debit side total is more, so it means there's a loss. Okay, what is the total? 1,12,500. 1,12,500. Okay. Okay. And what is the loss? 1,000 rupees is a loss. Now this loss is realization loss to be transferred to partner's capital account. So by fastest capital account and by quick's capital account, what is the profit sharing ratio?
3:2.
600 and 400. 600,
400.
400. So realization loss is how much? 1,000 rupees. Balancing figure. This is nothing but totally realization loss. It is realization loss. So immediately in the partner's capital account, you have to record the entry. No? So what is the journal entry for this realization loss? What is journal entry? Fast capital account debit, quick's capital account debit to realization account 1,600, 400. So in the partner's capital account, to realization. In the partner's capital account, to realization. So to realization, this is patent and this is realization loss 600 and 1,000. Guys, am I right? Tell me, people, am I right? Online people, are we right? Next is fastest loan, 10,000 rupees. Now, guys, as per section 48, subsection B, we have to make all the payment to third party. Now that we have made the payment to third parties, can I make the payment to partner's loan? Yes. So what is the loan payment entry? Fast loan is currently in credit. To close, I have to give a debit. So to cash, 10,000 rupees. So what is the journal entry? Fastest loan to cash. Fastest loan to cash. Seventh one, fast loan account debit to cash. How much? 10,000, 10,000. In the cash account, without forgetting, what will record? Loan payment entry. So by fast loan account, 10,000 rupees, you're making the payment. So guys, realization account also closed. Fastest loan account also no closed. Now what is the final ledger? Cash and capital. So first you will balance the capital. Please tell me guys, what is the capital ledger balance? So if I talk about fast, we have to make him 30,000 payment. We have to make the payment of 30,000 to him towards his capital and towards his profit 6,000. 30,000, 6,000, 36,000 we have to pay. But out of this 36,000, we have paid him in form of patent 5,000 and this 600 rupees we have to receive. See, 36,000, listen, 36,000 we have to pay to partner. 600 we have to receive. So what do we tell partner? Partner, from this 36,000 what I will pay, 600 rupees what you have to pay, and minus and give you the balance. How much balance you have to give him? 30,400. 30,400. So this is to cash. Now, if I talk about quick, we have to pay him 25,000 plus 4,000. How much money totally we have to pay him? 29,000 rupees we have to pay him. In that, there's a loss 1,000 rupees that he has to pay us. So minus it, how much you have to pay him? Which one?
So loss 400.
Okay. This is 400. This is 400. So 29,000 we have to pay him, and 400 we have to recover from him. So how much will pay him balance? 28,600. 28,600. So whatever the balance money, guys, we have balance surplus money. Now look at this. We have so much extra money that after paying the amount of capital, we are paying the surplus money in their ratio. This is surplus money which is paid and disposed of. So in the cash account, it will be by fast capital and by quick's capital. How much amount? 3,400, 28,600. 3,400, 28,600. Now, guys, the moment you pass the last entry, no, this is called a settlement entry. This entry is called a settlement entry. When you pass a settlement entry, both capital ledger and the cash ledger should tally and close in the same time. So capital ledger is closed. Please check and tell me, cash ledger also should be closed without any balance. Is it happening? Please tell me. Automatically, is it tally? So which means whatever money is there in the business, everything is paid off. Everything is paid off. Tallying automatic. Now wait, just
Yes, sir.
imagine the last entry that I've passed. No, I'm not passing the entry. I'm just removing it. I'm not passing the entry. Let's balance the ledger. Let's balance the ledger. So can I say this will be 2 balance carried on? Can I say this will be 2 balance carried on? 2 balance carried on. I'm saying the last entry, let me not pass it. I just want to show you how the balance should look like. Without the last entry, how the balance should look like. What is the balance brought on for cash, carried on for cash? By balance carried on, how much? 6,000 plus 8,500 and minus this 3 more. What is the balance? 59,000. Imagine I prepare a balance sheet after this. Without the last entry, I prepare a balance sheet. So what is my cash ledger balance? 59,000. What is the balance in fast capital and quick capital? 30,420. 30,400. 28,600. How much is total? 59,000, 59,000. Which means whatever money is belonging to cash, whatever the cash is belonging to the business, now we have to use it for repayment of capital. So what is the capital repayment entry? What is the capital repayment entry? Last entry, capital repayment entry. Cash account debit will not come. Fastest capital account debit, quickest capital account debit to cash because we're making the payment 59,000. So what is the amount? 30? 34? 30,400, 28,600. This is the final entry. So finally, guys, your cash and the capital ledger together simultaneously will close. This should be the ultimate thing. So this is a very simple and a basic question to understand the flow and the concept, people. So are you clear with the concept? Please tell me. Are you clear with the concept? Please tell me. Only people, I'm asking all of you.
Yes,
Anybody's got any doubts? Only Jana responded. How about Danusha, Gurleen, Harini, Isha, Selina, Sweta, Trisha, Yogi?
No,
Are
sir.
you feeling comfortable?
No, sir.
no, sir.
Everybody's comfortable, no? Now, this is what they've explained, like multiple, whatever journal entry we pass, no? All the journal entries, they have passed it with the proper explanation. So you can go through in case if you have any doubts. If this is also not convincing, you can get back to me and ask me and I'll clarify it. So what the impact will be in the stock account, what the impact will be in debtors account. So each and every ledger they have presented to all of you. What will be the impact in the PDD account, creditors account, loan account, everything is presented. But in exam, you don't have to show all the accounts. You have to just show that 5 primary accounts. Realization account, loan by partner account, loan to partner account, cash or bank account, capital account. If you're clear with this, I'll go with the next question. With that, we'll wind up. Illustration 1. Now here I will not do journal entry. We'll do directly ledger and finish this question at the earliest. Now you know the concept, no? I'll do the answer without any explanation. All right, people, are you okay with this?
Yes.
Yes, sir.
Okay. Illustration 1 says that X, Y, and Z are partners in the firm X, Y, Z, and Co. sharing profit and loss in the ratio 4:3:2. Following balance sheet of the firm is given on 31st March 22. They have given balance sheet as fixed asset is 5 lakh. Where will I transfer this fixed asset? Realization account which side? Debit side. Stock in trade, where will I transfer? Realization which side? Debit side. Sundry debtors, where will I transfer? Realization account? Debit side. Cash in and where will I transfer? I'll keep it in the cash in hand ledger itself. Partners capital account will be in the capital ledger itself. General reserve, where will I transfer? Capital account which side? Credit side. We have to be very careful. Capital account, credit side. Sundry creditors, where will I transfer? Realization account which side? Credit side. Okay. The partners of the firm decided to dissolve the firm on the above said date. Fixed asset realized 520. So fixed asset, that is 5 lakh worth of asset, is now realizing 5 lakh 20,000. And book debt for 440. What is meaning of book debt? Debtor value. So debtor, 5 lakh worth of debtor were paid as only for 40,000 rupees. So did we get the money at profit or loss? Sir, loss 5 lakh I have to get. I got only 440. So 60,000 loss. Whereas fixed asset worth 5 lakh, I sold it for 520. So it's a gain of 20,000. Stocks were valued at 250 and was taken over by partner Y. So partner Y is taking the stock. 3 lakh worth of stock is taking at 250. So we sold the stock to partner Y at profit or loss? At loss of 50,000 rupees. Was taken over by partner Y. Okay. Creditors are allowed discount 5%. So they gave us a discount of 5% and we paid the less money. So did we pay at profit or loss? We paid at profit because I had to pay 100% money, but he gave me 5% discount. So I paid him only 95% of the money. So 5% is the gain for me, realization profit. And the expenses of realization is 6,000. Now imagine there is an asset called as investment 1 lakh rupees. Asset investment 1 lakh rupees given in the question. But here below, nowhere they have mentioned anything about investment realized. So the question is silent about the realization of any particular asset. What will be the assumption? The asset is realized at nil value. Clear this point? Imagine a scenario. We had a bank loan here of 15,000 rupees. So you transfer this to realization account. But here the question is silent about the payment of bank loan. So what is the assumption? It is paid at the book value. Paid at the book value. Okay. So now this point you are very clear. Now, anywhere in the question have they told you that the partners are insolvent? Anywhere have they used the word insolvent? So this is a question where the dissolution is done and all the partners are solvent. All the partners are solvent means the court did not, declare anybody as bankrupt. And moreover, in the previous question, guys, in the previous question, I was not bothered about the solvency or insolvency because we had already sufficient money to pay back to the owner. We had surplus money to pay. If you look at the last entry was the entry where we were making the payment to the partner. We are making the payment to the partner. So this will not be two balance carried out. It will be by fast capital by fixed capital. That amount, whatever is from the capital account, please copy paste. So guys, the example what we did was a scenario where there was a surplus money in the business itself. And when the owner took the money, he took the surplus money in mind. Now, where the question of solvency or insolvency will come is basically when you don't have the surplus money. You don't have the surplus money and you don't have the money to pay the external liability holders. That is when the concept of solvency or insolvency will come into picture. So that we'll be discussing in the next class. In this class, very simple, I'm discussing the concept about the dissolution entries when the partners are solvent, which means what? The business has got lot of surplus money. At the end, we have so much money that the partner is taking that money and going home. So when he is taking money and going home, there's no question of insolvency. Insolvency is when I don't have sufficient money. Insolvency means what? I don't have sufficient money to make the payment to the liability holder itself. So that time what happens? We'll ask the partner to bring the money from home. So if he is bringing the money from home, still it is case one only. So insolvency is when the money is not sufficient to pay. The money is not sufficient to pay the external liability holders, and the external liability holder says that I'll take the money from your personal assets. And that time, if that person says that I am insolvent, you cannot take from my assets, then that is case B. Am I clear? So here we saw a question where, now this question also, guys, this question, illustration 1, an example is a case where we have surplus money and the partner is solvent. So I will try to frame one question where we don't have the surplus money. We have deficit money and the partners are solvent to get that money. In that case, what entry will pass? That also I'll teach you. So both are case 1. After that, we'll do one more question for insolvency. Am I clear? So now I don't expect you to significantly understand. Normally today you understand. Today what did we do? We did the case of solvency of a partner where all the partners are solvent. And at the end, we had so much money left over, surplus money left over. The partners happily took the money and went. In the next class, I'll give you one question where the partners were solvent, but the money was not sufficient to pay the liability holder itself. In that case, you ask the partner to bring money from home. He happily brought the money from home and paid it to the liability holders. So that also we'll do in the next class. This is very well within your case 1 only. So today in case 1, we did only one option. Second option is still pending. Now, open the realization account. Open the realization account. Now, all this together we can record in one shot. Please open all the three ledgers. Here only three ledger: realization ledger, capital ledger, and cash ledger. Only three ledger. Please open all the three ledgers. Please open all the three ledgers. How many partners are there? Three partners, no? X, Y, and Z. What is the first step? So write the balances of all the ledger. So what is the balance of the partners capital account? So by balance brought down. For X is 4 lakh, by 3 lakh, 2 lakh for Z. So 4 lakh, 3 lakh, 2 lakh. Okay. Then what is the capital for cash? 10,000 rupees. So two balance brought down 10,000 rupees. This is cash account. Two balance brought down 10,000 rupees. Now what are we supposed to do? So transfer all the assets to the realization account. So debit side of the realization account. To fixed asset. How much is the asset value? Sir, 5 lakh rupees. Next is, so to stock. How much in the balance sheet book value? 3 lakh rupees is the book value, sir. Transfer all the book value. When you transfer to the asset to realization account, you have to transfer at the book value, the value which is currently existing in the balance sheet. Then sundry debtors is existing at 5 lakh rupees. So two debtors, 5 lakh rupees. So the moment you record these three entries, guys, in the balance sheet, fixed asset is gone, stock is gone, sundry debtors is gone. Then sundry creditors on the other side. So buy sundry creditors. How much? So 3,20,000 rupees. Okay. Then general reserve you have to transfer to partners capital account in their profit sharing ratio. In their profit sharing ratio. So buy general reserve 90,000 guys in the profit sharing ratio. What is the profit sharing ratio? So 4 is to 3 is to 2. So 4 plus 3 is 7. 7 plus 2 is 9. So 90,000 divided by 9 is how much? 10,000 rupees. So 10,000 to 4 is 40,000, 30,000, 20,000. So 40,000, 20,000, 30,000. Guys, all of you comfortable so far? Online people, hello?
Yes, sir.
Yes, sir.
Now what am I supposed to do? Sir, whatever assets in quadrant 1, I recorded the asset. In quadrant 2, I recorded the liability. In quadrant 3, what am I supposed to do? Realization of the assets. So the question says that asset have realized following. So fixed asset is realized 520. Realized in what form? Cash form. Book debts 440 in the cash form. So buy cash. So buy cash in the inner column. Fixed assets in the inner column. Sundry debtors. How much? 520 and 440. So 5,20,000, 4,40,000. So what is the total amount realized? 9,60,000 is the total money realized. Total money realized. Immediately in the cash account also, please pass the entry. In the cash account, entry will be what? To realization. How much? 9,60,000 rupees. Cash received. Cash received. So 10,000 opening balance and further 960 are received. So total how much money is there in hand as of now? Total how much money is there as of now in hand? 9,70,000 rupees. Okay. The question says that creditor were paid. Creditor were paid 5% less money. So to cash. To sundry creditors, we paid 5% less money. So What is the creditors value? 3,20,000 rupees. So 3,20,000 in calculator put minus 5%. 3,20,000, please type it into minus 5%. Minus 5%. How much? 3,04,000. And the question says that realization expense is 6,000 rupees. Who is bearing it? The question is silent. Firm is bearing it. Who's paying it? Firm is paying it. So what is the entry? Realization to cash. Very good. So again, to cash, how much money? 6,000. Immediately record the payment entry in the cash book. So by realization, 3,04,000 rupees for payment to creditors. By realization, 6,000 rupees payment for realization expenses. Then if you come back, the question says that stock worth 250 is taken over by the partner. So it is as good as repaying the partner's capital in form of stock. So to this extent, I have to reduce Y's capital account. So Y's capital account debit to realization. Debit what comes in, credit what goes out. The stock is going out, credit what goes out. So Y's capital account to realization. So in the realization account, yes, by Y's capital account. How much? So 2,50,000 rupees. 2,50,000 rupees. And in Y's capital account, it will be to realization. In bracket, you can write stock. How much? 2,50,000 rupees. Only in Y's column. Please be very careful. Do not record in X or Z's column. Please record in Y's column. Now, what is the next step you have to check? Forget for a second to have dinner and breakfast. What you should not forget? To check assets and liabilities, if any is realized or unrealized, the information regarding the assets and liabilities, the realization information about the assets and liabilities is given or not given. If it is not given, then we have to accordingly make a decision. So here we checked in the beginning itself that all the information about the assets realized and all the information about the liability paid is already given. So no problem. You can balance the realization ledger. Please tell me. So this is quadrant 4 making the payment. Q4, quadrant 4. So what is the total, guys? Realization profit or loss? Profit or loss? Loss, how much? 80,000 is loss. Total is 16,10,000 is total, sir. Debit side is high. So I'm getting a loss of 80,000 rupees. So who will bear this 80,000 loss? So all the three partners put together. So by X's capital, by Y's capital, and by Z's capital in their profit sharing ratio. By Y's capital, by Z's capital. So 80,000 in the profit sharing ratio. How much? 35,000. Are you getting like this? 35,000 555. Okay. 35,555. Then 26,666. So make it 667. Round off. Then 17,778. How do you do this in calculator? Can you please tell me? So one time only you do, no? Into multiple times you plus. So 80,000 divided by the total of the ratio 9 into multiple times. Then 4 equal to 3 equal to 2 equal to. If you plus 4 equal to, you'll get this value. If you plus 3 equal to, you'll get this value. If you do 2 equal to, you'll get this value. This is calculator shortcut trick. All of you know this, no? Online people, all of you know the shortcut trick, no?
Yes,
Yes,
sir.
sir.
Okay. Now immediately record this in the capital account. So it will be 2 realization. This is realization loss. So 35, 555, 26,667, and 17,778. So okay, realization account is closed. Now please tell me for X and Y, guys, do we have surplus money that we have to pay to the partners, or should we receive any money from the partner? For X, let's see. For X, so for X, 4,40,000. Total how much you have to pay? Sir, 4,40,000 we have to pay. Do we have sufficient money? 4,40,000 we have to pay. But from that person, we have to receive how much? 35,555. So 4,40,000 before I pay, I minus the 35,555, which opposite person has to pay, and I'll pay the balance. I'll pay the balance. So this money will be paid in form of cash. How much money will pay to X? 4 lakh. Correct? 4040. 4 lakh 4,445. Correct? 4 lakh 4,445 we have to pay to X. For Y, sir, Y total money that we have to pay is 3 lakh 20,000 rupees. Out of that, 250 we have to receive from him in form of stock, and 2,667 we have to recover from loss. So balance, how much we have to pay him? 53,333. 53,333. Online people, are you getting the same thing?
Yes, sir.
My general reserve is 30,000. Guys, please check. Then how did you say 320? So it's 330. So 330 minus 250 minus 2,667. So are you getting 53,333? Okay. Now to Z, we have to pay him 2,20,000 rupees. In that, we have to recover from him 17,778. So balance, how much we have to pay? 2,02,000. Correct? 202222. Immediately record that in the cash account. So by X's capital, by Y's capital, by Z's capital. So whatever money is available, we have to pay to the partner. So please tell me the amount. 405. For Y, 53,333. And for Z, 2,02,222. Automatically your cash will tally. Automatically your cash will tally. Any difficulty, people? Any difficulty? Note this point, people. So we did today the concept of solvency of a partner. Means what? The two questions that we did today, guys, both the questions, if you see at the end, when you try to balance the capital ledger, we had surplus money, which means we had the credit balance in all the partners' capital account. So when we have surplus money to pay to all the partners, means what? That is, all the partners have the credit balance in their capital account. So this situation is called as a surplus situation. This is called as a surplus situation. All the partners have surplus money. Means all the partners have a scenario where we have to make them the payment. Here there is no problem. Sometimes it so happens that in the case of solvency of a partner, there could be one particular partner who will have a debit balance. When we have debit balance of a particular partner, means what, sir? Imagine a scenario. Imagine a scenario. I'm just taking a random value. Let's suppose here the realization loss for partner Z. I'm just taking a hypothetical figure just to make you understand the concept. Imagine here it is 3 lakh rupees. Means what? I have to pay him 2,20,000 rupees, but I have to recover from him how much? How much money? I have to recover from him how much? 3 lakh rupees. So will I pay the money to him at the end, or will I receive the money from Z? 2,20,000 rupees is the total money we have to pay, and 3 lakh is the total money that we have to receive. So where will the balance carry on come? Where will the balance carry on come? So credit side, how much? 80,000 rupees. So 2 balance carry down, and where is the brought down coming? 2 balance brought down, debit side 80,000 rupees. So if any particular capital account is coming as a debit balance, what does it mean? Means that we have to receive the money from that person. So if this person does not pay me the money, will I have sufficient money to pay partner X and partner Y? See, when capital account and cash account will close, whatever money is there, if I can pay everything to partner's capital account, no problem. But here it is a situation that I have to pay these two people so much money, but that much money is not there in cash. Why? Because I'm falling short of 80,000 rupees. Why 80,000 falling short? Because 80,000 Z is extra withdrawn, or X is supposed to give me this 80,000, you haven't given it. So now this is a scenario where a particular partner is having a debit balance. Now, if the partner is solvent, means what? He has got full money at home to pay the money. He has got full resources to pay this money. So the question says that the partner is solvent. What will you do? You will receive the money from that person. So instead of 2 balance carried on, what will be now entry? 2 cash. So what is the journal entry for this? Sorry, it is not 2 cash, by cash. What is the journal entry for this? Cash account debit 80,000 to Z's capital. So in Z's capital, by cash 80,000 rupees. Means what? The partner is having a deficit balance. He's having a debit balance, but the partner is solvent, which means what? He has got a lot of money at home to pay this 80,000 rupees. So in that case, what happened? He will give this money to us in the business, and business will get this 80,000 rupees. Now we have sufficient money. Already the existing cash balance plus 80,000, we have sufficient money to pay off this both partners' capital balances. Are you able to follow? So still this is coming under the concept of solvency of a partner only. So solvency of a partner means what? Two concepts. There could be two cases. Case one is a scenario where we have surplus money. We have so much of money in cash and bank that we can pay all of them to the partners, which means what? Partners are having all of them credit balance. But there could also be a scenario where any particular partner has got a debit balance. Now the problem will come when if they say that this person who's supposed to bring in the money, who's supposed to pay this 80,000 rupees, in case if is insolvent, the next concept that we'll learn in the next class. But anywhere now did I say that the person is insolvent? No. So if he's solvent, means what? He will bring in the money, and that money I will use it for the payment of both the partners. So already I have some money. With that, Z is bringing 80,000 together. So both the money put together, I'll have that much money which is sufficient enough to pay both X and Y together. So here in the solvency of a partner case, you can have case 1 and case 2. What is case 1? Case 1 is a scenario where all the partners are having credit balance in the capital account, which means what? At the end, everybody will get the money. But in case 2, they say that any particular partner is having a debit balance, and what are you first supposed to do? First, recover the money from the debit balance partner. Once you have sufficient money, then you make the payment to the credit balance partner. Am I clear at this point? The problem will come when this person from whom we have to receive the money, if he says that no, I am insolvent, I cannot pay the money, then the next concept we'll discuss in the next class. Am I clear? So next class, maybe what I'll do is in beginning, I will do one more question based on this. Because today we did both the question based on case 1. So I'll do one question based on case 2. So this concept is done. And then I'll move on to the next concept, which is the concept of insolvency of a partner. So what to do? How to do the accounting entries in case of insolvency of the partner. Now if you see in the CA foundation book, the questions are limited. For this particular concept, there's only 2 questions that we did today. And if you ask me, sir, is it that easy? It's not that easy. You take the question that is given in T.S. Grewal book, that different twisted questions. If you just take the realization part, guys, if you look at this, To come back here, come back here, come back here. We take illustration 4. In case of WCR, Workman Compensation Reserve, there are 5 scenarios. In these 5 scenarios, what will be the journal entry in the realization account? For that, there is a separate question in TS level, which is not there in ICA book. If you go to illustration 5, different assets are taken by the partners. If all these assets are taken by the partners, there are different scenarios they're given. In all these scenarios, how will you pass the entry? Can you tell ICA, you gave only 2 questions in the ICA book. In that, all these were not there. So whatever question you asked is out of portions. Can you tell ICA? Please understand, ICA is given you a book only to give you an idea that what is your syllabus. They never told you that from this only I'll ask. In this I can twist any way and ask. So you have to prepare properly and come. Therefore, this book will be very handy because lovely adjustments, so many complicated adjustments there. Look at the 5th question. Lovely adjustments. Come back to 6th question. Full of adjustment. Full of again adjustments. Complicated adjustment. Each and every adjustment are properly worked out. In the CBSE class. Do you think we'll have that much time to sit and record in the foundation level? Any academy at the foundation level, do you think we'll have that much time to sit and work out all the illustration of TS level book? Impossible. Everybody will work out the IC level and finish it. The person who is suffering is a student in the examination. This is something which I've realized, and I told all my students, you have to go through this book so that you get a complete understanding of different concepts. So in the exam, whichever concept they ask, from wherever they ask, whether it is there in ICA book, whether it is not there, you will be in position to apply the mind. See, again, I'm telling you, just because you're practicing this question, it doesn't mean that ICA will ask the question from this only. Related to this, anything they can ask. But by solving this question, what is happening? Your mind is becoming clear. For each and every transaction, you are able to apply your mind. Oh, this is why this is debited. So that is why this is credited. The application is getting better. So the application is getting developed, it becomes widened. So in that, whatever concept, however the twist can give you, you'll be in position to apply it properly. So if you want to develop your application of mind, it is important to solve multiple complicated questions. So once you learn to tackle the complicated questions at this level, in the exam, however they tackle it, however complicated they give, you will be in position to tackle on this spot. If you look at the illustration 7, again different adjustment entries for different transactions. If this asset is taken over by this partner at so much percentage, what is profit, what is loss, everything they've asked. In and out, I've worked out. For realization, guys, we just did one scenario, no? In both the questions, the question was silent. So we agreed that the firm is bearing the expense, firm is paying the expense. Other scenarios, where is the question? Here it is there. How many questions on the realization alone you see? If examiner is asking this question in the CA foundation examination, can you tell ICA, the donkey fellow, you are asking the question out of the syllabus and portions? Oh, how it is outside the syllabus? It is there in the syllabus, boss. You did not do the practice. That is your fault. Game over. Result is fail. Whom will you go and question? Nobody can question. And this is not wrong. What ICA is doing is not wrong. Absolutely right. Because how much question ICA will cover? Even if they give you, let's say, 10 extra questions, do you have a guarantee or assurance that it will come from those 10 questions only? No. You are practicing extra 40 questions from this book. Can anybody guarantee that the question will come only from these 40 questions? No. So you cannot blame anybody. You have to be prepared for every question, however they ask. That is why I told you for all the chapters, you have to work out the illustration question at least from the TS level book at least once or twice. Scan a book 3 times you have to work out before you go for the examination, so that when you walk into the examination hall, you'll walk it with confidence. When you come back, you'll come out with confidence. Or else, if you don't prepare well and go, while going inside also, full of fear. When coming out also, how was the paper? Allah will take care. Jesus will take care. Kadwil will take care. Everything they will take care. Means who will take care? What will take care? What will you do then? God. Lovely questions, guys. There's no end to it. See, again, so many entries, so many questions on the realization expenses. So it's my humble request to all of you that before you come to the next class, the remaining 3 classes which is there, class 4, 5, 6, please watch it and come. And all the questions from this topic, you have to be finishing it by next class. At least majority of the question you finish it. so that we spend 2 or 3 more classes on the new concept, brand new concept, where I'll go even more slow. We'll get a command over that. And please understand the next two concepts that we're going to discuss. 80% is from this only. 80 to 90% same thing we have to do. Only at the end, the last adjustment is there, no payment to the partner's capital. There only small twist is there. And that is a little bit complicated. So if this base is not clear, you will not understand that. So meeting men next on Thursday. 5:30 we'll meet it. Before that, those 3 classes has to be completed and you should be completing the chapter as much questions as you can, solve it and come into the upcoming class. Clear with this point? Online people, are you all clear with this point?
Yes, sir.
Trisha responded only.
Yes, sir.
Tanusha responded.
Yes, sir.
Sir.
Yes, sir.
Shweta responded. That's all. What about Yogi, Shweta, Selina,
Yes, sir.
Gurleen, Harini, Jana?
Yes, sir.
Yes, sir.
Chalo. So on that positive note, let's put an end to today's session, guys. I'll see you in the next class, which is on Thursday, 5:30 p.m. sharp. Until then, bye-bye. See you. Take care.